Hey guys, what's going on? It's Billy here from the best place to buy gold online. I hope you're having a fantastic day. So in today's video, I'm just going to be showing you a quick article which I found on CNBC, and it's titled "Jim Rickards says gold prices to go higher, expect the dollar to start weakening." And it's really interesting. Obviously, this has just come out recently from the mainstream media. Last week I spoke about three signs that this whole fiat system is starting to unravel. And one of them is that obviously the central bank starts to be the sole buyer in the bond market, and we've seen that already. And another will be that they'll keep interest rates at all-time lows. Some even going into negative figures. More recently, obviously ECB and Japan, and it's just another form of currency devaluation and stimulus, basically, just to keep the can down the road even further, and just to keep this whole thing going. And it's really, really interesting that this whole thing is now starting to look like 2007, obviously the run-up to the financial crisis in 2008, and from that, obviously 2008 on to 2011 is where we saw gold price peak again. History again just repeating itself. So just know this, that gold is going to continue going higher as long as governments around the world continue to just print money at will, devalue their currency, and carry on with the stupid currency wars. And nobody really wants to sort anything out, and they just want to keep kicking the can down the road. So anyway, I'm going to shut up now. I'm just going to play this quick video for you. Give me a couple of seconds because I've got to pause the video, turn off my microphone, and then obviously put on the computer audio. See you in a second.
It's not too late at all, Pauline. It's going to go a lot higher. And the reason is, people say gold is up, but the way I think about it, gold is really constant. What's happening is the dollar is going down. In other words, the dollar price of gold is going up, but that just means a weaker dollar. And so if you want to understand where the price of gold is going, you have to ask yourself, where is the dollar going? And as a result of this Shanghai Accord that was reached on February 26th, clearly the dollar's seen the highs. The dollar's going a lot lower. That means the dollar price of gold will be going up. So this bull market in gold is just beginning, really, because of the effort by the G4, U.S., China, Japan, and Europe to take down the dollar.
So, Jim, does this mean that you think the dollar will continue to get weaker in the foreseeable future?
Sure. I mean, this is what's been going on. This is really the currency wars, Pauline. It goes back to 2010. And again, if you take the big four, China, U.S., Japan, and Europe, Europe would like a weaker currency. Japan, China, U.S., everybody wants a weaker currency, but it's a mathematical impossibility. You cannot all devalue against each other at the same time. So you have to take turns. Go back to August 2011. That was the all-time low for the dollar. Using the Fed's broad index, that was the all-time low for the dollar. It was also the all-time high for gold, about $1,900 an ounce. That's no coincidence that the dollar bottomed when gold peaked. Then that reversed. Now, since then, from 2011 to 2015, we've had the strong dollar. But now the U.S. needs a break. The U.S. is very close to recession. China's clearly growth is slowing dramatically and dangerously. China and the U.S. are the two largest economies in the world. So they need the weaker currencies, and that means Japan and Europe have to suffer the stronger currencies. But the finesse was to keep the yuan-dollar cross rate unchanged. Everybody said China didn't devalue. They devalued a lot, but they devalued against the euro and the yen, which together are a larger trading partner than the U.S. So it's a little bit of a finesse keeping the CNY-USD unchanged.
Yeah. So, Jim, you say the gold story is really a weak U.S. dollar story, but I want to get your perspective on the U.S. Treasury, right, because they came out with a report basically putting several countries on a watch list for currency manipulation. They say 5 countries, China, Japan, South Korea, Taiwan, and Germany, are being watched very carefully for what they do with their currency. But they could all point their finger at the U.S. and say, hey, look what you're doing. Your dollar's weaker.
Well, of course, but see, everyone manipulates their currency, Pauline. It's just a question of whose turn it is. So the U.S. threatened Japan And this is part of the Shanghai Accord. I could give you 20 data points, speeches, policy moves by central banks, etc., that are all consistent with this. But look at what Christine Lagarde said to Japan at the IMF spring meeting just about 2 weeks ago. I mean, she threatened Japan. She said, don't you dare weaken the yen. And now the Treasury is threatening Japan, saying the same thing. They're all warning Japan, don't you dare threaten the yen. Some of this is for domestic consumption. Kuroda knows he can't weaken the yen. So I see the yen going to maybe 100 to the dollar, probably euro going to 120. But Europe and Japan have to get stronger so the U.S. and China can have weaker currencies to give them a little boost. But these public warnings are going out there, and Japan just, Japan would like a weaker yen. Of course they would. But they had 3 years of a weak yen, and they didn't do anything. They didn't make the structural changes.
So there you have it, guys. I hope you got value, and just to reiterate, obviously, what Jim Rickards was saying there, just to expect more currency devaluation and more negative and lowering of interest rates around the world. Central banks really are just not going to address this issue. They are Keynesian economists, and they believe that they can just print their way out of this, which is impossible. It's never happened in the past. Never will happen. All fiat currencies will return to their true value, which is zero. And the longer this continues, the higher and higher gold gets. So my recommendation is, you go and start accumulating small amounts of gold now to protect your wealth for this inevitable outcome of the dollar collapse and a new currency system and a new monetary system that we're eventually going to have. So I hope you got value. If you did, feel free to like, comment, share, and if you haven't done so already, go ahead and subscribe to my YouTube channel, and also check out goldfinancial.de, which is my website. We have the cheapest, finest quality gold in small quantities from 1 gram up into 100 gram bars. They are the cheapest prices anywhere in the UK and the rest of Europe. So I challenge you to go and find it cheaper elsewhere. And if you want to go ahead and register yourself for a free account, go over there. And if you also want to start recommending us, you can also get paid for recommending us. You can upgrade for a free affiliate account as well. And I'll see you on the next video. Take care. Bye bye.